It is a Tuesday, January 28th. This would be day 16 or something like that. So I was gonna take a look at where we at. Alright, so we had two EuroCAD trades since Friday of last week, I believe they were, from the 23rd and 24th. And they're still sitting. One is in profit, both of them are profit. They were in higher profit before. This is a regular retracement, so it doesn't really bother me at all. And I'm just gonna let these sit here, but I am gonna start trading some other stuff as well. Also, I took a trade on CAD yesterday because it's in the bottom. And it's still building up volume, so we have the market makers sitting here building volume. So sold into here, went up here, came back down, up, down, up, down. We'll have one more spike most likely and then a move up. So we'll let this one sit here as well. This one will be in profit today. Whether I take out a short-term profit or long-term profit, I don't know. I would like to see price come up to this level here. That would give me 68 pips to start with, because it'll struggle up in this area. And obviously this area is of interest. That's the next zone, which is 100 pips away. And then a break above this pivot would be phenomenal, but it's such a long-term trade. I don't know if I will actually wait for it to get to that point, and that trade would be about 162 pips. I don't know. Once it starts moving into profit here, once it's up a little bit around this area, the first 60 pips or so, we'll start looking at putting out in TSL, trading stop loss, and then let it just ride until it dies, basically by itself. So also, talking about structure, let's take a look at something that a lot of people use. It's called W and M. It's the formation of something that looks like a W or M. And right now we're at this W, we're first leg of W. We have the middle, we have the second leg getting ready to create. So we're looking for this to come up here and then break above that leg and then go into rest and then distribution up here somewhere, and then a new trend will set. So that's the W. The M is the other way around. You have an M here, first leg of M, middle, second leg getting created right there. So and it just keeps, you can see those patterns, but you can probably see a lot of other things as well if you just make your mind up. Just gonna finesse this box a little bit. Alright, so we're gonna let this one sit. I was actually checking pound USD. It's at the bottom of the daily trading channel. Over here, 2 weeks ago, we had said this was gonna go down. It did go down. Then it came up here, and this would definitely be a fib of this high to this one. And then it went down, and now it's at the bottom of the trading channel. So now the question is, what's going to happen over here? And I'm going to throw in something that a friend of mine was discussing and made a video about. One of the most important indicators for Forex trading. Now, I don't use it, but that doesn't make it less viable. It just means that I don't use it currently. I did look at it and I can see the use for it, but again, I trade naked charts, so that's naked. But it's called average true range. And so what that shows you is the average of a range, which this one is set, the default is set to 14, which means basically through the last 14 candles, what's the average true range? So it could have moved up and down 100 pips, but the average range of that would be something, right? So if we look at over here, from this point at 14 candles back, the average true range was 142 pips on a daily. So that meant in the last 14 candles, it moved an average of 142 pips. Now what's that? Why is that important? Well, part of it is because if you're setting yourself up as my friend Jin from I think it's DFX trading group. It's a close group, I believe. I believe they're using it and they scalp a lot. On this one, I'm not scalping. On this account, I'm not. But so why is that important? Well, it'll tell you what you could expect as far as moves goes in average. So if you're setting yourself up and you're going to try to figure out how far will it move, and you're thinking it's going to run away on you, and you're going to make 100 pips, but the average true range is 10 pips, then you're going to be surprised, because it's not going to move the way you think, and then you're just set up to really get stopped out instead, most likely, most of the time. So here we can see on this date that this right here at this time, it was moving an average of 142 pips. Now that's the average, right? But that means it could have moved the double amount of that at one candle. It could have moved 280 pips, right? Because the average is you take 14 candles and you divide the moves to get the average range, right? And there's 3 ways that's done, but you can look that up. Maybe I'll do a video on ATR and maybe a collaboration with Jin from DFX, I believe it is. Jin, if I'm saying the wrong name, type in the comment field. But the other thing I think that you could use ATR for is that you could find out if you're about to get into a good entry. And let's, as an example, I know I'm playing off of a good way of looking at it, but you can play with this yourself. So if we say that the ATR at this candle, for instance, right? We'll paint this candle for a second, just so we know where we're at. And the ATR at that candle was 103 pips, meaning it moved an average of 103 pips, right? But then now I have to take this away because I have to see the high and low on that. But now if we look at this candle, and this candle is 291 pips, and we said the average was at this candle 103 pips. So the range on that candle is almost, well, it is more than 2 times the average. So that would indicate potentially that this one is running into exhaustion. So how do we find that out? Well, we could have, at this point, we could have put a candle on this. You could do this on this current candle, and we will. But I just want to show here. So we had something trading over 2 times of the ATR. So if we start going into this to try to see, was there a setup? Was there something using what I use, which is volume and price action? Was there something telling us that this was about to happen? So here's the marker, and this is where the average true range was 103 pips, and this in this, where we put this on daily, that daily candle, which consists of, this is 4-hour candles, so a daily is 20, a daily is basically from 8 to 5. So so now we start looking at, do we see something here telling us that we have met exhaustion? Well, I'm starting to see this move up, right? So now I'm not looking at ATR because I marked the spot. So now we see this move up here, this body versus the volume, right? The volume and the body doesn't match up because look at the candle next to it. The volume in this candle versus the body or the spread on that candle is bigger than this big ass candle, right? So there's a setup happening here, and so this might indicate a good entry. So let's just keep walking it down. I should have marked the time, I guess. All right, so here we are again. Right, on 1 hour, this candle looks pretty solid. It's 291 pips. 1 hour. The volume looks good. It's the peak of the ATR if you want to look at that. I'm not using that right now. I'm trying to find, does this tell us that we're getting close? So we had a big move up, big wick here. I'm going to move this for a second. You see the wick up here? So he tried to push up, but he couldn't, and the price closed, starting to close lower, meaning weakness in the move up. Look at the next candle, the weakness in the bullish move, right? Then a bearish candle, just this is hiding something, and we can tell that on a smaller time frame. And then we have another bullish candle, bigger volume, but the body doesn't match up. And then we have a bearish candle. So we start seeing something over here, and this is during the Asian session, by the way. So again, we were trying to find out if this 291 pip was setting us up for a good entry. So we keep walking into it, right? Still, we have this candle right here. We see that price kind of stopped here, so it kind of ran out of mustard. We had a big bearish candle where we have a candle with almost the same kind of volume, but it's bearish, right? And then we see the bullish, it's just losing strength. And then we start looking for anomalies in volume, right? So nothing here, this candle looks fine. Another bullish candle that's losing. And then we see this one here. It's a bearish candle, the volume is starting to increasing, so that means our market movers are starting to get in. And another bearish candle with bigger volume than the bullish, right? So we're trying to find, would this have been the right entry? So we'll just keep walking down to 15 minutes. Oops. And let's see what we see. Right here we have a big volume. Here we have a big volume. So we can see during the Asian session, this was set up for a short. Now, most of us would have been sleeping right here, but we could have potentially expected something to come up here. So we see this candle here. It's large volume, and the body is almost non-existing. So that's an anomaly, right? Think about it. You have huge effort and little effect, right? Or there's an increased amount of effort going into this candle, but the candle doesn't display that effort. So someone's doing something here, and my bet, obviously now I know the answer, is that it's smart money loading up take this down further, right? So we just have to keep looking to see what's going on. Now you have a bearish candle with higher volume, indecision candle. Just keep walking, and now we're into European session. That's the light green, and you see the volume going up on the bearish. Someone's agreeing that the setup here is good for short, right? Because we exhausted the move here. So that was distribution, and then there's nothing left here. Apart from the ones that now saw this candle and said, holy cow, this is, I gotta get in. It's called the MoFo, right? Or a FOMO, actually. Fear of missing out on the MoFos. So someone saw this candle and said, oh my God, this is gonna run up. And so people start buying into this. That's what smart money wanted. They wanted you to buy into this, and you did. A lot of people here bought in, only to get stopped out. And you could have seen this, and ATR would have been very helpful for you. So ATR does show you what kind of move you can expect as far as size, and especially important for people scalping like Jin and his group. But it also helps you kind of identify, like, are you running into something that potentially is helping you set up for a new trade. And so this is, we can keep walking this one down. If we can find it. I have to zoom out. Zoom out. It went somewhere. It wasn't. Let me see, where are we at? It wasn't there. There used to be a way to put a marker on the chart, and you could just have it zoom in there. So this is on December 13th. Here we are. Whoops. Where did it go? Here we are. Whoopsie daisy. But there's the move. I mean, just look at this. How could you not buy into this, right? How could you be the one saying, "Oh, this is going to go to the moon"? So people would buy in and buy in and buy in just to get clobbered. And you would have seen that if you started out on the daily, which is what I've been saying now for 4 weeks. Start drawing your support and resistance out on the daily, even weekly, and work your way down. And now you have another tool that you can add to your arsenal, which is the ATR. Look at it far out and see if you see something that's being set up, right? So I moved this just to indicate people were buying in here. And you could see with the volume here, you could see that there was accumulation here, and then you have a candle sticking away here that's telling you where is this about to go. So could you have gotten in on this move? You better believe it, on this candle right here, right? But you just got to know what you're looking for. So just wanted to show that. A very good tool, and Jin and his group are using this. So I don't use it, but I just want to show that it is a very good tool. So and it's a very good indicator to have in your arsenal and understand how to use it. So now, could we use it for today? Sure, we can throw it in here and see what we see. Let's toss it in here, and this candle here, let's just put a marker, right? We have a lot of fibs, but we're at the bottom of the trading channel, so let's find out. All right, so the range on a daily candle is 79 pips. So let's zoom in and see if we can figure out how big is this candle. And actually, This is today's candle, so we shouldn't be looking at that. We should be looking at this candle, right? So I'm just going to move. I have this one here because what I want to see is how big is this candle. So this candle is 64 pips. So what's the ATR on this candle? It's 81 pips, so that seems not abnormal. Let's take a look at this candle. ATR is 85 pips. How big is this candle? 117 pips. So something's happening here. We have a big upper wick. We're a wick at the bottom. Here we have an indecision candle. So this could indicate that we're coming towards an end. And remember, I've always said that price is like a ship. When it's deciding to turn, it will take some time. So this candle here could end up being that candle that gives us a good signal on we should be getting in. Now if we look at this candle versus the ATR, this is 79 and this candle is currently, it's still in play, it's 64 pips, so it's within the ATR, so nothing odd here, but we can work our way down and let's see what we see. So again, this is today's candle, so I'm trying to make it real. Let's go down to 4 hours. Let's see if we see a setup, and immediately we see something, right? We have this candle here, big volume, big wick at the bottom, and close and open is almost right at each other, right? So imagine it opening over here, going up here, then going down here, and then just to close here, right, with big volume. So someone's doing something, which is accumulation. They're buying into the supply. Now remember, everyone's bullish here. Stop losses are sitting right here, right? So what are they doing? They're triggering stop losses. Even the ones that went bullish here on a candle that moved 50 pips, their stop losses is right here. Guess what happened here? They got taken. So supply was created, right? Another one, low volume here, and that's matching the body, so that's okay. We have a bullish candle, no specific volume, so it's a fake. Bearish candle, barely any volume, so that seems to be fine. Big volume, and candle is closing almost with the spread being 50% of the entire candle, right? So the candle is 54 and the body closed at 26. Something's happening, so the ship is breaking, it's stopping, it's getting ready to turn. That's my prediction, right? And here we have a big candle, big volume, but this volume and this volume is almost identical, and you see the signs before that and the signs here, the signs here. So something is about to change. So the ATR seems to be on track to tell us something. So let's just keep walking down. Right, that's the daily ATR candle, right there. So we're now down to 1 hour here. Right, and this is where we see price starting to hesitate, right? And you see the volume increasing, but you start seeing more wicks. Big volume. This candle is pretty good. Ooh, bullish. Big strong volume with big strong spread, meaning the body is big, matching the volume. So something's happening here. So that supply could be becoming more sparse, but they're going to obviously try to figure out, is there more supply? Can we create more supply at a minimal cost to us? So again, big volume, small spread, small body, that is, indecision candle. Continue, but see the volume keeps going up. That's your telltale sign, right? Big volume, big wick on the top, trying to push up. And this is the current candle forming. So let's just keep walking. So a lot of signs here. There's no strength here, and then we start moving down. We see big volume wick. So this is just a breaking pattern, and then we start to change here. So we have the market movers hiding, and I believe. So here's how they create the supply, right? So they drive this up, and now people get bullish. So now they're in. Right, they're in like Flynn. And let's say they get in here because they look to break the previous structure. So they're in here. They're now up 13 pips. They're calling a bust. They're quitting their jobs. You know, only to see, and then with the spread, they're probably in here somewhere, right? And only to see, and the stop loss is obviously here, right? So where are we at? Obviously here. So, right. So, what happens when their stop loss kicks in? They have to sell, which means the market movers are buying at discount. So that's great. So new supply, but look at this. This bearish doesn't have a lot of strength, so the supply is starting to dry out. All right, 15 minutes, zooming out a little bit so we can keep it pale. This is the daily ATR candle, right? Big volume on that candle. And here we have the move down, right? So we see that the strength is changing here. And then we had that bullish move, there's the fake out, and then we have the stop loss hunt here. So we keep looking. We're definitely chasing stop hunts here. And here's your area of liquidity, which is currently being executed right here. So I think that the ATR is telling us that we are getting good and ready for a setup. Now it's just about finding the right entry, right? And that is not yet. Still strength in here. This candle will most, they're closed. So this is your liquidity zone. See, look here in the bullish move, there's no strength, so that was indicating that this was coming. This candle and this volume matches up, so we're still not done. So we'll probably come down a little bit further. So the question is, how far down will we go? That always happens. So the question, how far down we will go? Well, we have a support line here. So that's the one we're going to pay attention to, 29.84. That's probably where price is going to go. And then we might see a better sign. So the ATR did help us identify that something is changing. I won't tell us when the right entry is. That we have to use the volume and price action candles for. So that's where we're at. So we're waiting for a setup on pound dollar, and I will be going long on that. I'm trying to be cautious about the time because I'm probably somewhere around 30 minutes or so. Check in 28 minutes. Trying to stop this in the next 2 minutes. So I'm going to go long on pound USD when I see the right entry. It's not now. So this is how you can use the ATR. Best of luck to you guys if you want to use it. This is just an informal way of showing how I interpret ATR. Again, I don't use the indicators. I trade naked, so feel free to use the indicators. The only indicators I use, as you have seen, and that's not really an indicator, it's a tool, is the Fibonacci's, right? So if we were taking from this low to this high, because this is the pivot, this is not the pivot, this is the pivot, this is actually the pivot, right there. We're inside of the OTE, so the optimal trading range that I pay attention to, optimal trade entry. So I believe that this candle will come down here and then potentially close inside of this zone, potentially. And that's what I will be looking for in order for the entry. So it's not the right entry right now, as you can see, but pay attention to the wicks here. The strength is dissipating from the bearish, so a setup is coming. All right, so that's where we at. Best of luck to that, and thanks to Jin and his group for sharing that video. I'll post a link to Jin's video on ATRs, and as long as you guys promise to smash my like button before you like his button. But you should smash his like button as well. I believe they're also trying to start doing some daily videos, and with Forex Trader, the ones that have some common sense, we stick together, and if you're willing to share your experience, please do so. Anyway, that's where it's at. We're probably at 30 minutes right now, so this is the only thing I see interesting today. Because when I look at the calendar, we had numbers from US. They were not that great, and I can now see that these two numbers have been changed. These two numbers were actually this was all red, and now they adjusted the numbers. So 1, 2, 3, 4, 5 numbers, and 3 are red and 2 are green. So that's what I think about that, but a lot of people use this stuff to trade. So, but we didn't see a whole lot come out of this stuff. So, and the numbers here worse than expected. It's not huge changes. It's not creating a lot of volatility, as you could see here. But if you scalp, this becomes very important, obviously. So we have the consumer confidence coming up in 45 minutes, and we have ECB lane speech. That's usually rocking around Euro USD. So the dollar is a little weak today. We can take a look at the dollar index chart. Dollar index. A lot of wicks on the top. In 50 minutes. Let's go out to 1 day. Busy. But remember this little blue zone that I drew like 2 weeks or so? Actually, I drew that, I think, first week. First week I started recording. I said price is going to come up here because we had some options that were telling us price was going to come up here. Well, it's there. So now it's reasonable to expect some form of retracement. Because this is also the liquidity zone, because the stop losses are about here. So we're in this liquidity zone, so now we should expect some retracement. The retracement is most likely going to be down to this level before it continues up to this level. So 98.42, which is the March call options for the dollar index. So price will come up to 98.42.43. And then spike over that because there's liquidity again over here. So I expect the dollar to become a little weaker here, and we can already see signs. Unfortunately, on Tradingview, you can't get the dollar input. You can't get the dollar volume. You can't get volume on the dollar. So for the volume, you have to actually pop open something else, like Euro USD, then you can see the volume. And we can see here big volume and wick. So the dollar is losing strength, right? Dollar's down, euro's up. So dollar's losing strength, so we will have a move up on Euro USD because, again, dollar is due for a retracement. So again, that's why also pound dollar is interesting for a long position. Here, this candle closed, look, huge volume, and we're starting to see more wicks. And if you go down, you see this little candle here, big volume, big wick, and then this is kind of like almost the final push. And then you have this one that is the disguise for smart money buying in and buying and disguising behind this, because look at that volume and that body, it just doesn't match up. So get ready. That's what I'm doing. Still gonna wait and see what happens down here, but that's it for today. So I will be posting the disclaimer in the beginning of the video, and again, this is educational, not telling you how to trade. I'm showing you how I trade. So for the purpose of education, this is how I trade, this is what I do, and I'm comfortable doing this, and I live to trade another day. So I'll see you guys tomorrow. Tomorrow is live at 8:30 a.m. Eastern, has been scheduled. So don't forget, hit the like button, hit the subscribe button, hit the bell next to the subscribe button, so you get notified when I post a new video or go live, and I hope to see you there. Thanks.